Hi guys, welcome to this week's video. I hope you all are enjoying your weekend. We'll go through some charts. We'll look at what we have coming up this week and what actually happened last week with the earnings and how did market react. So we'll go through all of that. Please don't forget to like and subscribe. Let's get into and look at some of these charts. All right. So this week we do have coming up is Fed's talking, and right here we have the Chicago PMI numbers coming out, pretty important, these ones. And then the most important date that we have is Powell talking, and we have the FOMC meeting, which starts at 2 o'clock, and then that's when we have Mr. Powell starts to talk around 2:30. So you do want to listen in what he has to say and what kind of wording he's going to be using, because market is going to be paying very close attention to it. And then we have the jobless claim numbers coming out on Thursday, and non-farm payroll numbers come out on Friday. So these are the things that you definitely want to pay attention to it, especially with Feds. I don't think so they're going to say anything. They're going to be very careful with what they say, how market's going to react to that, just because, if they come in and they say they're pivoting, market is already running, and I don't think so. That's in the favor of Feds when they want to tighten the financial conditions to bring the inflation down. For that to happen, the market has to do the opposite. We need the market to come down if the financial conditions are tight. But right now we're moving higher, and that usually means the financial conditions are not that tight. And the other thing is, in the reverse repo, we have about 2.2 trillion. This is the New York Feds. If you go back to the first few videos, I've talked about how, this reflects and how this website you can use, and it's updated around 1 o'clock Eastern time. So if we look at it, we have about 2.2 trillions in the reverse repo sitting as well. This basically is a money that, if Feds say something, could start to come into the stock market, which isn't good for, what Feds are trying to do. They are trying to bring the inflation down. That's their main purpose, right? So right now, if we look at where market is, what happened, even with the bad earnings that we had, and yet we ended up having a nice move in the SPX. We ended up, getting up to about that 3,900, and there is still potential. I would like, for market to continue and move higher. Let's just pull up. Let's pull up the SPX chart here. Looking at this, we have a little bit more room to go to it. I'm going to go through a couple scenarios of SPX, what I am seeing and what my thoughts are. So I'll share those with you guys. I would love for us to continue to move higher up to Wednesday, and then have that pullback, that we can say the market top is in. But again, market's going to do what market wants to do. All we can do is we can just work with what we have and what we are seeing, what's happening right now. So, if market is going higher up to the meeting, and most likely Feds are not going to do anything. We're not going to probably hear anything where market's going to take that as a positive and then start shooting out. Where I could see is where, in the month of December, Fed comes back and say, okay, we are seeing what we need to see, and there is 75-point basis in the interest rate, and that's when we can see really markets say, okay, that's already been calculated, and we start to see this run up. However, if market continues even after what the Feds say and continue to run up, that's completely against what they're trying to do to bring the inflation down. Because if you are trying to tighten the financial conditions, that affects the stock market. You can go back and look at your charts. You can see every time the financial conditions are tightened, stock market pulls back. And if it's doing the opposite, Fed's not achieving what their goal is. So definitely pay attention to what the wording is going to be. What are they going to be saying? So I do have a SPX chart up here. We've done a couple things. We've moved higher. We've crossed that 3,900 level. But we do have a couple of resistance coming up as well. I'm going to go over another chart to show you guys what my thoughts are on that as well. Do we have more room to go? Yeah, I think definitely we have a little bit more room to continue, which where we could see is in the 4,007, 4,012 area is where we top off. And if that could happen before Wednesday, that would be awesome. So, but again, anything is possible. So we'll see what it does. The reason I'm looking at a couple different ways as well, and why I think we're going to continue to have a little bit more room to go up. So if you look at it, I think I talked about it last week before, that I was looking for TLT to build another bear flag. Again, I don't think so. We've made our bottom, that we are moving from the bottom up. I don't think so. I think we still have a long way to go down. And as I had said, that I was looking for it to bounce from here, 92, we touched exactly, and then we have bounced from it. And we are starting to form this bear flag. So if you look back, we've done that exact same thing, and we pull high, more lower every time we build this bear flag. So if this is gonna happen where you have the TLT moving up, that's your treasury bonds, right? That means your stock market is gonna be moving up as well. So this one definitely, if you see the market up, this is running, you know that your TNX should be pulling back, your VIX should be pulling back as well. All right. So right here is your 10-year yield. So here we build the bull flag, we broke out of it. We're literally exactly doing the same thing. I do have this thing going up to the 5.3 area as well. So definitely keep an eye on. This market is no longer where you can just look at VIX and say, oh, VIX is coming down, market's gonna run. We've seen this last week where VIX hardly was doing anything and market was moving higher for a couple of days. You would see where VIX was staying above 30 and market was going up. Or even if market was pulling back, VIX wasn't reacting. And you had to go and look at a couple other things to get that idea what was happening. The other thing is dollar. Dollar has been very good signal for the market, what is happening, what's going to happen. So as we can see, if dollar pulls back, I would say a little bit more in the 108 area and then shoot up, that will line up with everything. You will have your TLT bear flag completed, TNX bull flag completed this pullback, and you will have your market topped off as well. And then it starts to pull back. Then we see the actual move in the market pulling back as well. So paying attention to all of those things is definitely a key right now. Don't just assume on one thing and be, making especially your long-term plans, what you're trying to invest, what are you trying to buy. Do pay attention to all of these things. I don't think so. We are done yet. I still have dollar coming up to the 121, 126 area. Which I'm pretty confident that we can achieve this. This was just to, reset some of your indicators. We are, this RSI has cooled down. We were very high, and you can see, and that helped the market to move higher as well. So another thing is, if you want to also watch how the financial conditions are, whether they're tighten or loose, this is the SHY divided by HYG. That will give you where the what's happening in the financial conditions. This is what I watch to keep an eye on it. So you just simply, when you're typing it up, you just type SHY divided by HYG. That will give you what's happening. So anytime we're running up, that usually means the financial conditions are very tight and market, equity market should be pulling back. Anytime you see this coming down, you can see that the market is pulling back up and the financial conditions are not that tight that we need, especially in this market where we are. So right now we are coming up to, another sport area as well. I don't have it right about here. It has a little bit more room right there. And then I would probably put before the breakout right there as well. So if this continue to pull back, equity markets are going to start to go back up and all of these things are going to line up. That's when we're going to see that drop that we need. And you need this thing to turn around and start to go up. This is what is going to help the Feds to have the financial conditions tightened, bring the inflation down. And that's what's going to help them, with the situation we are in right now, to slow down the economy, to bring that inflation down. All right, so let's look at SPX, a few scenarios on SPX. One I wanted to see is, what I'm seeing is this could be the back test of this shoulder. This could be a head and shoulder. You got the head, you got the shoulder, you got another shoulder. And this has been a pretty strong resistance. I did highlight it where we did reject before and came down. And again, right here, we rejected and came down as well. The other thing that you can go back to is your August 26th. Is when we had the Jackson Hole meeting. You can go back and pull those notes and look at it. What happened? What did the market say? And then look at all the other indicators. How were they behaving? What was happening? And then market reacted and we pulled back, right? So all of these things, it's not that it's going to follow to the T, but you can always look back to the history to see, and it usually, kind of looks very similar to it when it repeats. So this is where we are. Do we have a room? And we are pretty much about at 50% fib level as well too. So if it has a room, has a little bit more room to go, we could see all the way up to the 4,007 area if we are really strong and we're kicking it off. And it does have a gap above right here that needs to be filled as well. So pay attention to it. And then this is, where we have this broadening wedge pattern, which is my favorite. It can continue and come and test this trend line, which kind of lines up with your fib levels and your next, supply area as well, and then pull back. The other interesting thing is on the 1 hour, you can see is we have that broadening wedge pattern is coming along as well. We are building that bear flag on the 1 hour as well. So if you pay attention to it on the 1 hour, you do have that beautiful bear flag being built as well. So anytime it can change, we could see that it top off and then pull back. I would love all of these things to play out before Wednesday. That is that is my hope. Otherwise, you're kind of like back to the drawing board and then seeing all of these things, what's happening. Okay, so that's what we have going in the market. Let's just look at SPY as well, what's happening, and then we'll look at the US 500 chart as well. So this is what I had drawn from the last week. So far, it's followed it to it. We are right in the supply zone as well. So I want to see how we react. Do we have a pullback, when market opens Monday and then continue, or we are going to just pull back? Or it could be that we just go sideways and then we see what market does from there. So definitely paying attention to that. And then on the weekly, we beautifully captured this, the 200 moving average, bounced from it very nicely. Again, the weekly candles are looking very strong as well. The other thing is your RSI on the weekly is still below 50, so there is more room to the upside from here as well. So some of these things you want to pay attention to it and see does this goes and test this supply again, which is the 404, 402. And the thing that you want to pay attention to is once we complete the 392 level, if we clear 392, your next is 397, and after that you get the 4,402, and then 407, 411. Those are your areas that you want to pay attention to. SPY, and then US 500. All right, so for US, I have kind of another pattern drawn to see what could happen. And we did take the liquidity and then we bounced from it very, very nicely and had that pullback. Even though, like look at all of these big companies, their earnings wasn't the great, but we have a nice moves happening in the market. It's like, the good news is bad news is good. So what my thinking is, the reason we are also moving is we have a new month can be starting as well this week. We're going to be going into a new month, which means new fresh money is going to be coming in, right? Sometimes what happens is those big companies start early. So on that Friday, this big move that we took, it could be that those are doing, all of their buying is starting now, but starting next week, there is still fresh money that is going to start to come up. Do we see the top happening right away before the Fed meeting? No, there is a potential that we pull back and we continue to have a little bit more room because that money is still there that needs to come into it. As you know, a lot of the buying happens at the beginning of the month, and then the other thing is a lot of the buybacks are going to start as well in November. So you will see a lot of this money coming into the market. We might not top off until maybe until end of the week or even beginning of the next week. So only play what you see. Don't just go with the, one thing. Always do a proper research, proper charting, and looking at it, what's happening. Only take the high probability trades. So please always remember that. And we do definitely have a room on the RSI here as well. So again, I would like to see, this is our daily fair value gap as well. You can call this as a golden top where we could reject and come down as well. So I'm definitely watching all of these things to see how market does and what market does this week coming up. And another thing, I don't think so we're going to get center rally in December. I could be completely wrong, but I think there is more room to the downside than it is to the upside. After all of these, small rallies do take place, you have to remember no bear market has bottomed out. VIX not going up to 40. So VIX has not gone up to 40. So if you're thinking the bottom is in, then we were not in a bear market. For a bear market to happen, we definitely need VIX to cross above 40. So VIX on the daily is losing the 200 moving average. This is a pretty bearish candle. So this really lines up with all of the things that we are watching and looking at it. If VIX does pull back into the 24 area, and this all happens before Wednesday, there could be potential, then this could be a rocket ship and taking off as well. So remember that. All right, let's look at some of the things that we talked about last week, how it happened and how did that work out. So I wanted to go over my trade that I had said I am in. This is Dollar Tree that we went over, I think twice already in the video. So I was in this trade, I had calls, and as I had mentioned that I've taken it right here on this bounces, and it broke out very nicely from this triangle, and the trade went up to 106%. So This is the exact same trade that I took, and I'm actually completely out of it, even though there is still more room to the upside of it because we're right in the gap. So there is a little bit more room left in it that it could continue to go up. However, it met my trading plan, what I was looking for it, I got. So I'm out of it. Actually, I've started my put position on it because if you look at Dollar Tree, and every time it goes, it can stay oversold for a bit. So I am a little bit early. However, it's my plan. I've only taken half of my position and I will be adding more to it. So if we do end up completing this gap and it rejects here, I will buy rest of my position and I have a time on it. I do not just buy for a monthly, I do have time on my position. So, and then I'm looking for this thing to right back down to at least into the 140 145 area, and or even start taking my first take profit around the 200 moving average as well. So that's Dollar Tree. And the other one that I had given you guys was Roku. And if we look at Roku, what a beautiful move on Roku as well. So it's so far it's following, and Roku also has earnings. We actually have a pretty decent earnings coming up as well too. I think I pulled up the earnings chart. Let's look at it. Okay. So we got quite a bit of earnings coming up this week as well. You got Uber, you got AMD, Airbnb. I will be going over the Airbnb chart as well. You got Lily, you got Roku, and it's some of these big names. Again, you have a good amount of earnings coming out this week as well. So which could also affect your market, and you can see how we react. As I said before, good news has been bad, bad news has been good. So again, Roku has earnings moved very nicely from the demand area, still has more room to go. I would say even in somewhere in the 60, 67 area is totally doable if rest of the market is running. And then from the earnings, depending on what they say and what it does, it could pull back as well. So that's what we have. And then the next one we looked at was Etsy. Okay, so we are below the 200 and you are in, have this small trend line that is is building. So if we are having that good, that good week, and we are starting to move and it rejects in this area, it does still has a room to the room to the downside as well. As you can see, your RSI is still below 50 and it is pointing down. So you can keep this one on the list. I would say break below of 94.42. I would give myself extra few dollars just because you don't want to be that if they're stop loss hunting your orders and having to cut that early. So you can wait for it to break below 92. You still have a room to the downside to catch. However, if we are breaking this trend line, you can always then write it up into this supply, which is a used supply, is not always the best right now. We do have a very small supply, and we can see if we can get up to the 100 area or not. If it can break above 100, then you do have a room to the upside as well. Okay, and the next one I think we looked at ENPH and cost, and then I'll go over. Okay, so ENPH, beautiful move on this one as well too. So look at that, we gapped up. Still has a little bit more room left to it. I think again, if rest of the market is doing what it needs to do, it is going to be very nice move up. And I was hoping for it to gap fill. I did not. I was able to scalp it, but I wasn't able to, I would say, take full benefit of this move that happened up here. So another, again, has a room up, and I still have the same path falling for it. Time on it, end of 2023, 2024 contracts. This thing is going to have a beautiful drop on as well. All right, so now let's look at some of the charts that were requested by the team. So I am going to go over and I am going to share some of the dark pool data as well. So looking at Starbucks right here, We are looks like a back testing of this 8710. However, I do like how we have the RSI pointing upwards on the daily, and it has this zone right here. If it can clear and be above 80, 89, you do still have a room up to the 92. And then the next thing I wanted to show you guys was, let's look at Starbucks. So looking at Starbucks, your biggest dark pool level is at 88, right? And where is Starbucks? The Starbucks is at 80, 87.10. So if we are not able to clear this $88 level and it is breaking below, you can see what the dark pool prints are on the downside. And this is current open interest right now on your options contract. So we still have quite a nice open interest in the 120 strike price as well. And they do have earnings coming up on Friday. So you want to see how it reacts to $88 level. If we can clear, and then the next highest is the 92.22, any of these two levels, you have a room on your chart for this thing to continue because you have a fresh supply in this zone that it can go and test as well. So that's what I'm watching. I would only get into calls if we break above 88.62 or the $90. Then I at least have a $2 move that I can take advantage of it and continue to, for it to continue to move higher. Again, nothing without a time on it. But my biggest thing is can I be watching how we can clear this $88 level. Okay, and the next one was Macy's. Macy's is interesting. We rejected right at the 200 moving average as well. So you could also say this is, kind of had a double bottom and then it moved up. It does have a strong support in the 1556 62 area. We are way overbought as well. Macy's, whenever it does, it can shoot up and then it pulls back as strong as well. Anytime it does shoot up as well, shoots up. So for this one, I would say if it does clear 21 right here, you have a room up to the 23, $24 on it. Again, for me, I think Macy's could pull back very nicely. Even on the weekly $23, $24, you do have a room for it to continue and then pull back very nice on it. And if I were to look at the dark pool prints, and I think this is already in the money, the 1950 strike price, and then it does have that the $25 strike price has the most money. But then look at your puts are way higher than your call on the call side of the open interest. And you have, this is your dark pool print, and where we are right now on M is at $21. And look at your dark pool print. So if it loses below 1990, you know your next strong level is the 1679. Dark pool prints can be used as your support and resistance. If they're above, obviously it's going to continue to move higher. If it's below, then you want to look at what is the next one that has the biggest money on it. So then it would be the 1679. And if we look at our chart, we got about 1562 on it. However, I'm already actually on a longer dated puts in Macy's, and I'm gonna be holding this one because my final on this is somewhere in the $11 to $10 on Macy's. That's where I will take a majority of my contracts off, and I have plenty of time on it. That's what I am looking for it on Macy's. And then went over Starbucks. Let's look at Netflix. All right, Netflix broke above your 200 moving average. We're right in the gap as well. So there is a room to the upside to see if we are gonna, continue and fill the full gap, or we're gonna come down on this thing. I personally started puts on it just because I don't think so Netflix has any much more room left into it, because this is the fair value gap on it, and we're right at it at the top of the fair value gap. And I'm looking for this thing. My whole take profit will be in the 275 area. Then it definitely has a room that it could bounce. But currently I do have my puts started on it. Every time RSI curls down, we do tend to come down on Netflix as well. However, I could be a little bit early just because looking at the rest of the market, if we are going to have a move higher, this one does have a room to fill on top of the gap as well. But that's again $30. Netflix can move anywhere, $10 to $12 in a day as well. So it is possible that it could, but again, I'm taking a chance on my puts, and if it needs to, I might end up cutting it as well. But looking at, let's look at their, where are your Starbucks? No, Netflix. Sorry. We do have, where is the longest? We got 288.63, and 302 was the highest level. So let's look at the 302, and where did we get rejected? 301.19 is what the highest been from this rally up. Actually, sorry, it had the 305.48 is what was it for the highest for with these earnings, where we ended up going to it, right? So looking at the dark pool prints, if we break below 288.63, we already are below the 296.94. I think we are. Yes, we are. We have a room to see how we react to 288. If we are breaking below, then that 275 level is coming up. And if you look at your call to put open interest as well, you can see this 300 strike price was the highest, and Netflix has already been above that. And so I'm pretty sure a lot of these are in the money, or they have already cashed it out as well. And then this is where the put side is. You got the highest put is at the 250 strike price. So I am going to be watching how these levels react. So right now, 302 is my resistance on Netflix. If Netflix can break above 302, you are then has a room to fill this this gap as well. So we can watch to see how we react to the 288, the highest dark pool level there. Does that become a support, or are we going to break through it and it becomes a resistance? So right now, 302 is your resistance. If Netflix breaks above 302, the next level you want to watch is 305, and then it's going to continue into 311 and then fill this top of this gap as well. All right, next is our Airbnb. We do have a position in Airbnb as well, so we'll see what it does. Again, I have this triangle forming on Airbnb as well. Does have a room. Again, 120, 118 and 121 has been a strong resistance for Airbnb. If it doesn't break above, I think it has a more room to the down to the, the $90, $95 range is what I'm looking for Airbnb. Was it for 1 hour or 4 hours? Okay, 1 hour right here. As you can see, this wedge has been working very nicely on it, and every time we have tested this trend line, we have come down. So I'm definitely, does it have a room potential to bounce with the rest of the market? Of course it does. It could, and then pull back. So if you see it's struggling in the 118, 121 area, that's kind of a signal for it to take a put, and it can come down into this 95, 96 area as well. But again, we want to watch and see what happens these Wednesday, and what the Feds has to say, how market reacts. All of these things do pay attention to those things. So I did pull up their dark blueprints as well, and look at that. The highest is at 121 and 118. So both of them, if Airbnb is not able to break, you can say you have, then the next ones are in the 113, 111. Those are the areas that where you have the prints. We are currently at 115, 21. So we're even below the 117, which was this is where your resistance is. 117, 118, 121 areas, your resistance. And you can see we got the open interest pretty high on the put side than on the call side of it. So that's what we have. So these are the trades that we took on this week in the live. So this was the only one. Walmart puts are the only ones that we're waiting to see if we are going to make money. Last week we had this Twitter was the open one, and we did take a loss on this one, and everything else was hit. We had a Disney and Twitter and Adobe. I got stopped out of my runners. I only took 6% on this one. And then on the small account challenge, we currently have 2 positions open. We had our Coca-Cola and GM open. Both of them ended up paying. Coca-Cola paid 20% and GM, the highest on my runner was 37%. So right now we have 2 positions open on small account challenge. If I'm not mistaken, there might be one more, but I think 2 of these are the 2 that are open. And then bot swings, as you can see, we had, for the month and for month of August and September, both have been 100%. And we had the Coca-Cola open position. I do have 10 runners just because our expiration has 8 months on it. But we did end up, those hit 25%. And most of these ones for the month of October, I do have, I would say 8 open positions right now. So we'll see how we do there. And that's it. That's all I have for you guys. I hope this helps. I hope you guys are enjoying and liking these videos. If you are, please don't forget to like and subscribe. If you have any questions, feel free to put them, or you want to see something else, feel free to put it down in the comment section, and I will do my best to include those in the next video. Thank you.